Indian households are diversifying their savings with investment in mutual funds and equities, rising sharply from 7% of financial asset in 2022-23 to 15% in 24-25. While bank deposit declined slightly, however, the long-standing preference for gold remains strong. Gold imports surged to $12.07 billion in January, nearly tripling from December. A growing channel for this investment is gold exchange-traded funds, reflecting the increasing financialization and formalization of household saving, even as it adds to gold import pressures. Gold ETFs, from niche product to investment wave. Gold ETFs function like mutual funds that invest in gold. They offer advantages over physical gold, no concerns about purity, storage, or security, and the flexibility to invest in small amounts. The fund handles gold purchases based on investor inflows. Record inflows in January. What began modestly in 2007 surged dramatically in January, according to the World Gold Council. India Gold ETFs purchased a record 15.52 tons of gold in January, nearly equal to the previous 3 months combined. Data from AMFI shows net gold ETF inflows more than doubled to an all-time high of Rs 24,040 crore, even as equity mutual fund inflows fell 14% to 24,029 crore rupees. For the first time, gold ETFs attached more investment than equity funds. Gold ETF inflows accounted for 22% of total gold imports, rupee 1.1 lakh crore in January. The share was even higher for silver. 52% of silver imports were linked to ETF inflows. Speculation and economic concerns. Analysts suggest the surge may reflect large-scale speculation in precious metals, while it may represent a shift from physical gold demand. Concerns remain that heavy investment in gold, financial or physical, effectively amounts to capital moving out of the domestic economy. Gold rush redux lessons from the past. After the 2008 global financial crisis, high inflation, a weakening rupee, and slow growth drove Indian households toward gold. Imports surged, forcing the government and RBI to curb free imports and introduce measures to discourage physical gold purchases. Sovereign gold bonds, a policy experiment. Launched in 2015, sovereign gold bonds (SGBs) offered returns linked to gold prices plus 2.5% annual interest. Indian invested in bonds equivalent to 147 tons of gold worth 72,274 crore rupees, reducing the need for physical imports. Rising gold prices made the scheme costly, with annual payouts nearing rupee 18,000 crore. The government discontinued SGBs in early 2024 due to mounting fiscal pressure. Renewed concerns over gold investment. Although inflation is currently moderate, geopolitical tensions, policy uncertainty, and uneven global stock market gains have renewed interest in gold as a safe haven. A January spike in gold ETF-driven imports pushed India's goods trade deficit close to $35 billion, highlighting the macroeconomic risk. Given rising precious metal demand, a redesigned sovereign gold bond scheme, possibly extended to silver and other metals, may have managed imports while offering household structure investment alternatives.